Thanks for watching this preview video at xm.com. We'll be discussing the Reserve Bank of Australia's upcoming meeting and the potential reaction in the Aussie. I'm Maria Pachardis, and joining me is lead investment analyst Rafi Boyajian. So Rafi, it seems as though inflation in Australia is on the way down. Back in July, the Consumer Price Index was at its lowest point since February 2022. How is Australia's economy doing now, and what action is the RBA likely to take when it meets on Tuesday?
Well, Maria, like you pointed out, inflation in Australia is on the way down. It has fallen below 5% now. And not only that, the economy is slowing. The recent PMIs have been pretty dismal. So although in the second quarter, we may see a slight acceleration compared to the first quarter, the GDP numbers, by the way, are the next day on Wednesday. They're expected to come in at 0.3%. But potentially the Australian economy might contract in the third quarter, and that's because the higher rates have started to take their toll. Last year, initially, it was the housing market that was struggling. This year, consumption has started to suffer. Although even there, we have started to see a bit of a pickup in recent weeks, and also the housing market has started to rebound as well. So it's not a completely negative picture in Australia, but the underlying trend is slowdown, and most notably because of the slowdown in the Chinese economy, Australian exports have actually fallen rather sharply in recent months. So that's why the RBA is proceeding cautiously, and that's why they're expected to keep rates on hold for another month in September. Now, as to what happens for the rest of the year, that's entirely different conversation. Markets are, very certain that the RBA won't be raising rates again. But given some signs of a turnaround and also potentially a turnaround in the Chinese economy as well in the coming months, we can't rule out yet another rate hike later in the year.
So, given all this, what's the outlook for the Aussie?
Well, the Australian currency has started to rebound a little bit because of, the step up in these support measures, the stimulus that we've been getting out of China, which it does seem to be piling up now, all these half measures. So it is quite likely, although the markets are still disappointed that we didn't get this big stimulus announcement that would have quickly restored confidence in the markets, and in turn boosted the Aussie as well. Potentially all these measures they will add up, and they will start to stimulate the Chinese economy of the coming quarters, and so maybe there is reason to be optimistic about the Australian dollar in the medium to longer term, but in the short to medium term, I think it's going to take a bit of a while for that to happen and potentially to work its way through the Australian economy as well. And with inflation coming down, the RBA isn't under a lot of pressure to act urgently. So potentially there could be more downside to come for the Australian currency, especially if the US economy continues to fare better.
Rafi, thanks so much. This was a preview video here at xm.com.